Hello, today is March the 14th, 2020. Let's go over our calls. We said anything less than gapping up and taking out this high promptly should lead to lower prices. That's more than 100 handle drop, so that qualifies. Look for the pattern with the early low. This is it. Monday has the early low as well. And we said unless we gap down smartly, this number should print. Well, this high came within 3 handles. That's close, but it's not close enough. There's a tolerance, but it's nowhere near that big. And if you waited long enough, miraculously as it seems, the number printed. Just a review of stuff which we do on the weekend. If you're going to make a post on my channel, make all the posts you want, just give the reason. Don't want to give the reason, get your own channel. A lot of people don't get every post I make. If you want to get it, YouTube makes you click on subscribe and the bell. Kind of a crazy system, but it's their website. They can do whatever they want. Here we had an ultimate buy signal and a buy signal that said this drop wouldn't stick, and lo and behold, it all worked. Here's the weekly chart. This is Tom DeMark's combo sell. When you take out the TDST line within 3 bars, let alone 1, it leads to a huge drop. So a huge drop is coming, but it doesn't mean you drop every day. Support is 1 full bar under this line. This is it. So this bar is support. Doesn't mean this low can't be undercut by a bit, but if you get a bar that's well under this one, support fails and you get a huge collapse right now. There are 2 things, and more than 2 things, but there are a number of things arguing against a huge collapse right now. One is you're completely under the lower Bollinger Band on the weekly chart. That's not a place from which collapses normally start. And the other is a sentiment indicator, the percentage of bearish people on the American Association of Individual Investors website is at the highest it's been since 2013. So if we collapse from right here, it means that the amateurs are right. Now that's possible. It only means something if the amateurs say one thing and the pros say something else. Just be aware this isn't the most favorable condition for a collapse starting now, although I think the collapse has begun. Speaking of collapses, what is a bear market? Well, it's a definition of terms. Everyone's saying 20% in a day, or 20% from the high is a definition of a bear market. You can define a term any way you want to. To me, if a stock goes from 1 to 100 to 80, it's still in a bull. Doesn't mean it's a bear market to me. My definition, which you can accept or reject, is that the S&P has to decline to a new low under a declining 200-day moving average. So here was this big drop, but we never declined to new lows under a 200-day moving average. And by that definition, this was just a collapse in an ongoing bull. So what does a bear market look like? You'll notice all throughout the 90s, we never had a decline to a new low under a declining 200-day moving average. According to that interpretation or definition, this was all a bull, and we didn't really get a bear until the 2000 top. This is declining to new lows under a declining 200-day moving average, and that was a real bear market. It's a drop which stuck and didn't get reversed pretty soon. So you can accept any definition you want. I think this is coming, but it's not here yet by this definition. Well, this is the Gann fan lines on the monthly chart, and even if they aren't Gann fans, you can connect this high and this low and these lows. And you can see what strong trend line support we have here. We drop through it in a straight line. Nothing says we can't go lower. Just realize you got multiple support lines. A huge drop to it, but not through it yet. And if you're going to get support, this is a logical place. Well, this is the count I'm using. I'm expecting to see 5 waves down. And this break we had Thursday is pretty significant, and that makes it just as significant that it didn't stick. We traded over it. Now, to make this reversal count, you have to go over Friday's close by 1 cent. And of course, we have no guarantee that's going to happen. But if we do, then this is a false break. And if it is a false break, this count has to be reevaluated, and particularly if we go over 28.55.84. Now it could be this is just one of 3 and the collapse is going to continue, but that's not the only interpretation. This could be an ABC here. Any number of ways you can count this. Well, a 13% rally in a day, that's pretty big. Back in the 1930s, a lot of moves happened over 10% in a day. I wasn't around back then. I don't think many traders were around back then. But this is kind of unprecedented during our lifetime to have moves of this magnitude. The high volume in the E-mini contracts associated with lows, anything over 3 million contracts, you have to be aware it could be a low. Now, of course, we could have higher volume tomorrow, Monday. You don't know, but at least your antenna ought to be up. The largest down day ever was on Thursday, and very often the largest down day is the day of the low of the drop, and the same thing works in reverse. If you have a strong rally, usually the most points are gained on the day of the high. And here the most points were lost. It could be the day of the low. Of course, for all I know, we'll drop more than that Monday. You don't know, but at least that's one of the things I look for, the possible low. Here's the wall into the close. And it's also in response to a news event. Responses to news events, this is the President's news conference, usually get reversed quickly and completely. So that would indicate we could even get under this low on Monday, but that's not the only way to read this. The reason the wall works is that amateurs are saying buy at any price. And it also could be short covering where they just say cover at any price. The problem is we had this huge drop after the close. So it certainly isn't people covering their shorts at any price because there's selling. And it shouldn't be amateurs saying buy at any price, because this is the time of the day and the time of the week when amateurs are the only ones playing, and amateurs are saying sell. Even after a strong rally, the amateurs are saying sell, and these people are usually wrong. Well, here's the daily pattern. We have a couple of patterns here. We have an inverted, a diamond on stilts, and the hole in the wall gap. Here's your wall, here's your gap. These things tend to fill. They tend to fill quickly. Most commonly, they will fill Monday, but the latest they'll fill in their preferred time frame is by early Tuesday, preferably Tuesday's open. Typically what happens is you undercut the low of the wall, find support, and then rally. And of course, if that happens, you'll create a new hole in the wall gap here, which would mean we take this out, usually, but not always, pretty soon. But that's not the only pattern. And of course, if this doesn't fill by Tuesday, it fills at some time. It just doesn't have to be anytime soon. Now here's your inverted diamond on stilts. Here's your stilt. Here's your stilt. The high here is a fib target of the prior consolidation. but it's not a very common fib target. Usually you get 31.850, or usually you get 32. I'm all confused today. Usually you get 61.8, 38.2, or 50. You can get 78.6, but that's not a very common one. And here's the origin of the left stilt and that support resistance. If we do rally, you wouldn't expect it to go much beyond that. But if you rally and take this out promptly and hold it, that's support. So if the bulls can continue this move up Monday, especially if they gap over this price, 27.4138, this leaves an island here, island reversal pattern. We could go higher. Well, here's what I have. Monday's pattern has the early low. We could gap up first. Friday's late surge was a response to a news event. Usually reversed quickly and completely, and the wall into the close often is greeted by gapping down. If it plays out, we should fill the hole in the wall gap no later than early Tuesday, find support under the low, and have an open door to fill a Monday morning gap down. But a number of indicators suggest we may gap up instead and validate my preferred wave count and have a good move up before the decline resumes. One is we dropped so much in futures. That's dumb money selling instead of playing along with the rally. The percentage of stocks in favorable patterns is so bad it's good. Typically, here's your index. Typically, when you drop down to like 1% or 0, that's the end of the move. And if you keep on dropping, this has no place lower to go, so you're going to get a divergence with prices dropping and fewer stocks participating in it. You just don't tend to go down much lower when that prints, about 1% or something. It's as low as it gets. You have the highest percentage of negative emitters since 2013. There's a VIX reversal, the largest point move of the drop. Bulls have a chance to make Friday's late rally stick if they manage a gap or a quick move over the origin of the left stilt and maintain it. Otherwise, we're likely to gap down, undercut Friday's late surge, keep the preferred wave count intact until we complete 5 waves down. These are very exciting times. Early low Monday, very negative long-term pattern, but if we gap up over this, be prepared to feel pain if you're a bear, and that's today's call.